Hi, welcome to this video day, which is on the 20th of March. It's Saturday. Just going to give our updated outlook and forecast for the USD today. Now, in terms of the USD, plenty of good risk to reward pairs to look at. We'll go to the charts in just a moment. Now, we did do a video on the USD just around 2 weeks ago. Our view has not changed since then. We think the USD is going higher. It did show good strength, and last week was a bit of a choppy sideways week. Now, in terms of the US dollar going higher, the key fundamental behind the charts to keep an eye on is bond yields. I'll explain why they're so important for anyone new watching our videos in a moment. Bond yields are going higher, and they will support the USD in our view, and the market is pretty bearish of the USD. So there's plenty of speculators short who could get taken out on stop. Now, what we will do is we will go and take a look at the charts. But just before we do so, please do keep in mind, it is my view, as of this specific moment in time, it can of course change in line with the market action and conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 FX pairs, you can get live access to our member center by clicking the link beneath this video. You can also follow us on Facebook, join our Facebook group of traders, and check out our recommended regulated ECN broker. Now we're going to go and take a look at the charts. Before we do the FX pairs, I just want to look at bond yields and what they're doing, and also the sentiment behind the charts. Now, I've just been doing some updates in our member center this weekend, so I'm going to use the charts from there. So let's go and take a look at them. Right, first chart is the T-Note 10-year weekly. Just for anyone new watching our videos, I'm just going to explain why bond yields are so important in terms of the US dollar's direction. Now, in terms of the T-Note, we gently rise up here, and then we go into an accelerated move to the upside. This is the weekly chart. We cleared out 1.5. We remain really bullish of the USD. As long as we can stay above that level, we think we could go to the 2 level. If we get up to the 2 level, that will really see the USD gain traction to the upside in our view. Reason bond yields are so important is that is the yield, 1.73, you're going to get in the 10-year note. That is very attractive for investors against other G7 bonds. And bond markets are absolutely huge, okay? Now, if people come in and buy bonds, they obviously have to buy the USD. So we're looking for more strength to the upside here. Now, in terms of how attractive the yield is, I just want to show you this chart here. It's against Japanese bonds, UK, and German bonds, US bonds in light blue. You can see they've gone parabolic to the upside, yield well above the other three, okay? So US bonds, very attractive. Now, in terms of the next chart I want to go to, I'll look at this one here. This is US inflation expectations, really soaring to the upside. Market seeing higher inflation coming in the US, okay, and higher interest rates down the line. That's why the bond yield is going up. Now, the Fed do not want to raise interest rates. They've already said this. They do not want the bond market spiking. But, investors can just see inflationary pressure is really going to build, and that should lead to higher rates. Okay, so would just say really that investors are seeing what the Fed aren't, or the Fed see it, but they don't want to acknowledge it. Right, next chart. Next chart we want to go to, there's another one on inflation. This one here is net USD positioning on the commitment of traders report. Comes out, it's from the CFTC. It shows 3 groups: non-commercials, asset managers, and leveraged funds. And you can see last week there's covering of shorts by non-commercials. They're still short when they're beneath this line. Leveraged funds coming up to the 0 line. Asset managers are still down here. It's a big group. This was a record short position held by them. It's starting to unwind. We think it'll unwind more. As these shorts come out in the market, that will boost the USD. Market's still pretty short the US dollar. I want to go to the next chart. Where is it? Here it is. US economy is obviously having that huge boost from the Biden stimulus package, and this is expected growth of the US versus the G9 countries, okay? Growth expectations 12 months forward. And you can see they've soared. Now, if an economy is doing well, then so should the currency. But look at the dollar index down here, okay? The gap between growth expectations and the dollar is the widest on this chart. So that should underpin the US dollar as well. Right, there's a little bit of background to the USD. Now let's go and take a look at some pairs. Right, first chart is Euro USD. We are bearish and we're expecting a move down to 116. But I just want to go through the chart from here back in November, where we have this big rally up in the euro, and we didn't think it would take out 122, but it does. Gets up above 123. We said at the time, when we were looking at banks, brokers, economists' view of the euro, we could not find anyone who was bearish of the euro. The market was expecting 124, then 127. We noted at the time that the euro speculative long position was the biggest since 2013. So we looked for a correction. We did get a decent trade there. We did have the rally, sold the rally, and made a mistake on this one. We came crashing down. I should have moved my stop down or taken profit here. I put my stop at 119.90. Came up, took me out on stop. Should have left it behind 120. I just didn't think it would get up to 120, so it was only a minor profit. But we've come back in. 119.60. We did it on this red candle here. We did come down. Big blue up to try and take out 120. Can't do it. Red tail can't get through. We finished red on Friday away from the 120 level. So you've got double top here on the bodies, double top on the tails there. 120 is the big level. So any rallies up towards level, I think, will fail. And I think we're going to go down to 116. In terms of behind the charts, we did look at bond yields earlier on compared to the US. Euro bond yields are nowhere near as good. Also, the economy is in a total mess. The US economy is doing far better. Eurozone have really messed up their vaccinations. And you can see in the news this weekend, Poland and France talking about extended lockdowns again. The economy is just not going to recover quickly in Eurozone. And the ECB are powerless, basically. They'll just print money like crazy to try and support the zone. It won't work, but obviously the stimulus is bearish for the euro. So we think we could go down to 116. We could actually go even further. Let me just show you Euro USD weekly. You can see obviously the surge up, then the rollover. We're looking for a move down to here, these bodies, okay, and those two bodies there. But I think longer term we could go down to 110. Things are that bad in Eurozone, okay? But obviously we get to 116, that will be a decent result. Now, in terms of the euro, we're just obviously out and out bearish, which makes us bearish of euro correlated currencies. I'm going to come to some correlated euro currencies against the USD in a moment. If the euro continues to fall, the correlated currencies could fall quicker, and there's some great opportunities in them. We'll come to them in a moment, but I want to do another major next, which is going to be AUD USD. Been very, very strong. It's a big rally up here, a little bit of sideways correction, then a push up towards the 80 level and the rejection. And we did actually come in on that rejection, and we came down, still in the trade. Then we got bumped out there, okay, just by, I think it was about 10 or 20 pips. Then we came back. My own view is this 78 level now should provide resistance. Two tail pokes there, came down. That tail poke was a bit annoying, but it's come down. Now we're sitting here. We come through the low. I think we'll be off to 74, then down to 72. Rallies back towards 78, I think, will fail. I think that was the last real attempt of the bulls. Okay, now in terms of the Aussie dollar, it has been supported by very, very strong commodity prices. And there's one commodity in particular you should keep your eye on if you're trading the Aussie dollar. This is iron ore. Now, in terms, this is the weekly chart of iron ore, and you can see here back in 2020, basically around the end of the first quarter, we just see a massive rise in price. That's well over 100%. Now, in terms of commodities, speculators are heavily long. There's a huge amount of speculative interest in iron ore. I just think the specs are going to get taken out on stop. Now, we did dip here, rally back to new highs there. Now we're heading south. I'd like to see this level here give way. 155, if that level gives way, I think we'll be off to the downside. 120, I think, is on the cards if speculators get run on stop. So keep your eye on iron ore. But yeah, bearish of the Aussie dollar. And also, in terms of the Aussie dollar, let's have a look at the weekly chart. AUD USD. That is a massive rise, about 40%, isn't it? From the lows last year in March. Big rally. I've got 72 as a level on the day chart, but we could get down to 70 potentially. That's a big support level. But if we got down to 72, I'd be happy. Where are we going to go next? Another commodity currency, which is going to be it's going to be the CAD. And the CAD actually has been very strong against the USD recently. We did have a long trade in and we got stopped out as we came down here to a new daily chart low. But you can't probably see it so well here because I've blocked it with these trend lines. But this blue candle here, make a new low of low 124, okay? And then we rebound strongly, okay? So I think that's the exhaustion of selling. Friday, we finished above the previous open, even though we're off the high. I personally think the double trend line support will hold and will push up to the upside. Yeah, 128.30 and then possibly on to 130. So it's a decent risk to reward trade. I think all the trades we're looking at today are decent risk to reward. But yeah, this one did surprise us. Yeah, the CAD doing that push there was on a very strong unemployment report in Canada, which had the market excited about Bank Canada is going to be the first central bank to raise interest rates. Well, I personally don't think that's going to happen. But if it does in the price, and we've seen a little bit of a rebound, we're looking for more strength. Right, let's go and take a look at some more pairs. The next pair we're going to look at is going to be NZD USD. Right, so last of the commodity currencies against the USD in the majors, and a bit of a similar background to AUD USD. Nice strong move up there, bit of sideways and that big push up. And yeah, the last video we did have a short trade in after we failed and came back through 74. We got decent profit on that one. Now we're back in at 71.70. We got taken out on this rally, okay, but double top here on the bodies, double top on the tails, and we've come off, okay? So I think these bodies should hold, those tails there. So any move above 72 should fail. Stop behind the two tails here, which you can't see probably very well because I've obscured them with my second level resistance. But looking for a move down to 68. Now the commodity currencies, and mentioned, iron ore, Australia's biggest export, important in terms of the Aussie, and it's full of speculators. But commodities generally, the commodity complex has been very firm. That's supported the commodity currencies, and I just want to show you this chart, which I forgot to show you earlier, which is how bullish investors are of commodities generally. They've never been more bullish. Investors are holding their highest allocations ever in commodities. The last time these levels of optimism were reached, Brent oil was over $100 a barrel. Okay, the global economy was in much better shape back in 2011 than in 2021. So we're looking for the commodity complex to correct generally to the downside, pressure The major commodity currencies lower, the AUD, CAD, and NZD, obviously, and also emerging market currencies, which rely heavily on commodities. I'll come to some emerging market currencies in a moment, but let's go back to the next chart. And this is USD CHF, and this is a good example of looking where speculators are too, bullish or bearish. In this case, bearish, and we noted it here when we got down below the 88 level. Speculators held their biggest short position in over a decade, and we thought they would get run on stop. Now we do see a little bit of gentle movement up here, bit of a correction, then we take off to the upside. This one well over 200 pips, and the USD CHF is not a fast moving pair. So nice move up, correction of overbought, and they found a bit of support here. There's heavy support at 92. If you wanted to come into this one just on a breakout, I think we're going to 96. I'll just show you the weekly chart. There's the breakout, a couple of candles that are just kind of hanging around here. But 96, big level. I think the USD will get up there. Take out the rest of the speculators, still good few short and correct the USD's oversold condition. So despite the fact it's made a big move to the upside, I'm still looking for more strength. USD NOK. It's been a horrible pair to trade this one, actually. Come down here, base out, up, back down. It's very sort of choppy sideways action. But I think, in terms of commodities, crude oil is due a big hit, and Norway is the biggest exporter in Europe of crude. And also, I think the NOK is very historically overvalued, and we've got a long trade in. A lot of support here now. This candle here is exhausted, but any strength next week, I think it's worth coming in for a move up to 9, then 9.20. In terms of the euro correlated currencies, this is the one that's been the worst for us because it really hasn't done much. It's just gone sideways. So euro going low, which should pressure this one as well. Crude oil hopefully will break to the downside. USD oversold. USD going up. Now I'm going to come to my favourite euro proxy, which is the SEK, Swedish krona. And we've been having a go alongside in this one. Did have a nice move up there, then back. Another nice move up, and now we're kind of hanging around. I think this is just a buy for a move to 880, then possibly even 9. Really good risk to reward on this pair. And Swedish krona, if we go back over the last year, it is one of the top performing currencies against the USD. So I think USD is oversold. Euro going down will also drag the SEK lower. A little bit of kind of hammering out a base here, and now I think we should be going to the upside. I like the look of this one as well. USD CZK. In terms of having a go at the long side of this one, we've been doing it since we bottomed out, come back down, got stopped out, we've now come back in. Just basically got support here, and then major support here, and I think we're going to go to there, and I then think we're going to run on to weekly resistance at 25. Okay, so you've got the break up there, bit of a retracement, now another breakout should see us follow through. And I think we take Eastern European currencies, I'll look at the PLN in a moment, they're really weak. They rely on Eurozone so much in terms of exports. Just feel the USD, it's kind of turned to the upside. That's just a natural retracement going higher. USD PLN is the same. So in terms of this one, we're still in it from back down here. We break up, a little bit of a correction, then working its way higher. We should go up to there, and then we should go up to the 420 level. So plenty of upside in this one. You go and look at the weekly charts yourself. That's where I've got the target. Sorry, the second target from. Sorry, I can't say it. But both Eastern European currencies, they look like they could have a lot more weakness ahead. USD SEK we really like, and USD NOK we're looking to basically get a decent trade out of it. A few more pairs to finish off with. USD MXN, an emerging market currency, also a commodity currency. US dollar, really nice run up. And this is a really decent correction back to a major support level. Just come through here, aiming for 22, then 22.50. Again, really good risk to reward on this one. Okay. I don't think these highs will provide resistance. Obviously, we'll manage the trade as it goes. Let's go to the next one I want to look at. USDs are, it's probably been the strongest of the emerging markets against the USD. This is a massive support level, and we've triple bottomed basically above it. Just a breakout through here, 16, then possibly up to 17. I really like the look of USD ZAR with that big level of second support here. Okay. Right, USD SGD. Now, in terms of this pair, very similar kind of personality to the Swiss franc. It's not the most volatile pair, but you can, as a long-term trend follower or longer-term trend follower, you get some really nice moves in it. And we got a decent move in this one, a little bit lucky. We came in above the 132 level after that spike lower, and off she goes to the upside. A little bit of a retracement, 134.20, so a couple of hundred pips in this one. But looking for obviously quite a few more, up to 138, so 400 more pips to come, hopefully. In terms of the SGD or Singapore, heavily influenced by global trade and the outlook for the global economy. And I think the market just looking for such a strong global recovery, which I personally don't think is going to happen. But for me, that's in the price. USD should work its way up to 138. So for patient, long-term trend followers, I think this is a good pair, just like USD CHF. Okay. Where do I want to go next? It's going to be my last pair. It's going to be the USD against the Russian ruble. And what I like about this one is you've got this really strong level of support here. So I've skewed my line slightly there, apologies. Push up. There's big blue after we made a new low on the red. So that's kind of a reversal candle for us. Then we push on up. And this red indecisive candle here, you can see it. It's going to push through the level. I think we'll go up to 78, then maybe even higher, 78.50. If we do break out, my stop at moment's behind here. Probably bring the stop up behind here. That will be, well, I'm hoping it's going to be, I keep saying good risk to reward trades, don't I? They all are, in my view. Rub, very influenced by commodity prices, and crude oil, very important. To Russia, we think crude oil is going to get hit. Also, there's geopolitical tensions, isn't there? With Mr. Putin and Mr. Biden not getting on too well, that could well boost the USD if those tensions get worse. So, yeah, they're the opportunities in the USD that I like. And yeah, I think the US dollar, yeah, market's still pretty bearish of the USD. And, you know, investors, I think, are a little bit unconcerned, or a lot of investors, about rising bond yields. You know, the Fed will come in and intervene. I don't think they will. Bond yields should continue higher. US economy, yeah, starting to gain traction. Big stimulus package, that's going to add to inflationary pressure. So yeah, like look at the USD long. We'll see how we go in the coming week. Tomorrow, a lot of people have said, yeah, I've been focusing on the USD over the last few weeks. I haven't done too many crosses. I'll do a video on my favourite crosses tomorrow. But that is the video for today. Thank you very much for watching it. Take care. Have a good day.